I always start off the show with a summary of kind of what I saw happening in the stock market this week. And so let me share the chart here. Okay, so this is the S&P 500. I did something a little different here. This is actually weekly data instead
Hmm.
of daily. Just kind of smooths it out a little bit, and we can kind of see what's going on. You can see the big run up in 2021 and hit that all-time high at the beginning of 22 and then dropped, and now we're back. We're higher than we were, and you can
Yeah,
see. Go ahead.
we finally broke that 5,000 mark.
Yeah, that was nice. Actually, today we kind of opened up above 5,000 2 days in a row this week. Wednesday, Thursday, we just kept going right up to it. We touched it on Thursday. Oftentimes it's for whatever reason some of these numbers are barriers. I think because people put in sell orders at certain
Yeah, it's
levels.
a psychological barrier.
Yeah.
You have a nice round number at 5,000. It's a good time to take profits.
Yeah, exactly. And whether it is or not, I actually had a client appointment very early this year. We'd had that nice run up, and they said, "Oh, all my friends are telling me I should be taking profits," and I said, "Well, I don't really play it that way. I usually let things run. I believe in momentum, and when things are running, I might take profits if I saw a lot more weakness before, but it turns out that you were better off kind of hanging in there,
Hmm.
right? I mean, look at the line. That's it got a little hiccup in that line, but it's pretty straight up. That's a market that is really kind of catching up to where it probably should have been in the first place because, when we go back to what kind of transpired in 2022, high inflation, they're raising interest rates,
Yep.
quite dramatically. We had the Ukraine situation also at that time, but which scared people about oil price, which could also impact inflation. But all along, the numbers have been showing inflation is coming down. The Federal Reserve has been raising rates without directly impacting the economy in this particular case, which is very unusual. So it caught people by surprise. And now finally, the Federal Reserve seems, at least at this point, to be done raising rates. We'll see what happens long term, but and even talking about the possibility of lowering rates. And
Yeah, they're waiting for
market
some
likes it.
sort of kind of stabilization of inflation before they want to make any cuts.
Yeah, and that's personally, I think we've already kind of seen it. If we look at the last 6 months, uh, I don't know that they should be doing a rate cut based on that. So I'm okay with them waiting for a little while. But they do have to, be careful because last 6 months was at 2% on core PCE,
Mm.
but the last 3 months annualizes out at 1.5%. So again, it'll be interesting to see. The market is still betting on a May rate cut. Was betting on a March one. Now
Yep.
it's not. I don't think May would be a terrible time to do something. I think they do need to be careful, but the problem is, again, this is really important to understand. This Federal Reserve, and especially this Federal Reserve Chairman, Chairman Powell, they do not want to go down in history as the Federal Reserve that messed up inflation again,
Hmm.
like the group did in the 1970s. So what happened in the 70s? The inflation was up, they raised rates a bunch, and then they finally, got inflation to start to come back down. Labor started to get softer, and so that's their other mandate is trying to have full employment. So they actually lowered rates, and then inflation just got completely out of control.
Yep.
And they ended up having to raise the federal funds rates up to 19%, really at the very end of the 1970s, very beginning of the 1980s, in order to kind of break that inflationary cycle. They don't want to get into that, and I think they're be happier to have us have some type of a soft recession than they would to, be doing, a rate decrease too early. So now, if you look at what's happening, though, it's kind of interesting because the stock market is still running, even
Yep.
with all this worry about when they're going to lower rates, and the market thinks 6 rate cuts, and the Fed says three, and all that. And the market's got the stock market has other issues that it can look at besides that. The earnings, which have been pretty decent. The momentum of the market, for that matter. The artificial intelligence, right? The
Yep.
consumer spending. But if you look at the bond market, that's bond market slow down. We actually have a yellow signal on our bond market right now for the shorter term, mainly because that run that happened with the bond market has stopped as this disagreement between the market and the Fed.
Yeah, rates are actually, I think that it's the second highest they've been since the start of the year. So rates have gone up.
Yeah, as the value of bonds have come down, and what's transpiring there is that bonds have inflation as the or interest rates as the number one issue about those bonds. you can get into quality, but if you're talking about AAA rated and treasuries, which makes up a big chunk of the bond market, you don't usually get into the quality issue per se. And so the real only other issue is the rates.
Yeah.
And so we are seeing the bond market slow down because of this argument about rates and when they're going to lower rates and what have you. The stock market is still signaling that it doesn't see recession here. We can see that in this chart. And that's something we want to watch for. So if the Fed leaves rates up for too long and creates recession, that's something that would affect the stock market, because a recession is generally a lowering of the growth of the country to negative for 2 quarters, and there's a bunch of other things. But unemployment's coming up, and so companies are, interestingly enough, one of the reasons we're doing so well right now is because companies have been preparing for recession
Yeah.
all the way through this big downturn. And so they've become a little bit more mean and lean, and that's why we've seen the earnings come in. Again, a pretty decent earnings quarter that we're having. Still haven't heard all of them. Still,
Yeah.
Nvidia's right at the end there, or towards the end, so that can be a big one that drives things and such too. So this week, a couple things I think are interesting. Number one, it was an article in Bloomberg magazine, which I thought was very fascinating. It talked about, so far this year, every up day is up 0.66% on average,
Mm-hmm.
and every down day is up 0.45% on average. If you do a ratio of that, it's 1.5 times better on an up day than a
Yep.
down day. The last time we had that was 1995. Okay, 95 is a really significant year because it was the first year in the best 5 years in the history of the stock market.
Yeah, it was the start of that .com boom.
Yep, start of the dot-com boom. What do we have right now that's sort of like the dot-com?
You could say AI is the new .com.
That's right. So, and it was very similar. I was very involved in watching the markets for my whole life here, and I remember 95 very specifically because, first of all, I kept having all these people tell me that it was going to fall apart and that it was too high. It was just the beginning of what was happening there, and so that is also combined with this pent up demand. This could be a really interesting time period. I just keep shaking my head, and so that I thought that was a really interesting stat, and again, that's a really really good 5 year period. Things were doing really well. It was easier to make money, that's for sure. You just had to be careful that towards the end, you've got to be able to do something to protect yourself as this thing develops, because it got really nutty, right?
Yeah, and you think about AI as kind of like a tool that companies will use across the different industries, and so as companies become more and more efficient, they have better earnings results and more profit, and so that's how it drives the entire market, not just the AI sector of the market.
Yeah, I remember hearing from a CEO talking about how the internet at that time was kind of in its infancy, really, it was great. All these .com companies doing well, but what he was talking about was that the real profits were probably going to become from the companies using the internet, and he was right, dead on right. And of course, there was Amazon. There's companies that came out of that
Yep.
were .com companies, but you think about the productivity gains. If we had to go back to 95 without the internet, essentially at that time in the function that we see, so it is a big deal, and that's what we kind of see with the artificial intelligence, is that ability to increase productivity, which of course would lead to higher profits, and profits are what drive the markets in
Yep.
the end, right? Uh, so we had the third week in a row with first-time unemployment claims have dropped. And so every week they report, how many people are applying for the unemployment for the first time, and continued strength in the employment market is kind of fascinating. I remember we had a jump in the number of job
Yeah.
openings. We've had a really big surprise with the number of jobs created, in December that was reported last Friday, et cetera. So the job market is really strong. I think, again, the Federal Reserve's dual mandate of full employment and 2% core PCE inflation is going to make it easier for them with that strong labor market to not lower rates as soon.
Yeah, and you can see not every labor market's strong.
Yeah.
With tech I think in so far this year has lost about 30,000 jobs have been
Yeah.
laid off,
Yeah.
and so you can talk about how different industries have just different kind of where they're in recession or not, or contraction.
Yeah, I remember the chief investment officer for Charles Schwab, Liz Saunders, I believe her name was presenting and saying that last year that factories production was already in a recession. So there's services have been so strong as
Yep.
people shifted over. So that masked the thing, and we've ended up with some overall growth. So yeah, any pocket that you get into, you can find good or bad, right? So we generally talk about the overall, mainly because we invest in the overall. We buy these type of indexes. It is tech heavy, that's for sure. But that's what's happening. So um, it keeps on going. So another article talking about how if you have a positive January, and we had a very good January, and you have a positive February, we're in the ninth day, so we got a
Mhm.
ways to go, but it's really good so
Yep.
far. Uh, if you have two good months at the beginning of the year, 100% of the time that that's happened, we've ended up with a positive year for the year, and the average rate of return for that year was 24%.
Mhm.
So it's just stacking up. We got the Zweig breadth indicator. We've got this, ratio of positive days to negative days. That's as good as 95. We've got this, possible 2 month start that is, has been a good thing in the past. And again, last year everybody's asking us, what do you think about 2024? Well, I mean, we keep getting all of these
Mhm.
pieces coming out historically showing. And one thing I will say as a caveat that there's what I call the outside influence. That means something crazy happens someplace, could knock everything off, right?
Yeah, the black swan event. You never
Yeah,
see it coming.
yeah, exactly. So that's always out there. And my biggest thing I think about is some just giant international event of some type, China and Taiwan or whatever it might be, that would scare the market off of these things. But if you kind of can discount that at least somewhat and ignore that, and you look at the basics of what's happening economically, what's happening with the leading indicators, what's happening with the actual chart pattern. I mean, just
Mhm.
look. Things are lining up to be really good for 2024. So very, very nice week again. We're bound to slow down. This is a crazy stretch, even for a 1995 type run. If you look back at 95, it had some periods of time that it comes down. I remember after the pandemic in 2020, we had a heck of a run all the way up until the end of 21 in the end, right?
Mhm.
Because of all the money that was put out. But even then, we had a couple 10% drops, had like two in a row actually, September and October of 2020. And so that, be aware that, that's normal. As a matter of fact, in this run that we're looking at right now that started in October of 2022, we had that 10% drop, end of July to the end of October
Yep.
last year. So still great market. Even in a great market, you're going to have 10% drops.
Mhm.
That's just kind of how it works. So that could happen. But keep in mind that the momentum is still there, and the money that's coming in is obvious to me. I mean, you can see it. I mean, even on days I wake up and you look at the market opens up, and okay, and it drops, quite a bit, and
Mhm.
then it'll kind of work its way back up. Still might be negative for the day, but it came back a 0.5%.
Yeah, a lot of times we've seen like the market kind of starts off, but towards the end of the day shows some strength.
Yeah. And today's thing that the market was waiting for was this. They revised the CPI. So CPI for December was revised. It was actually slightly lower, right?
Hmm.
Uh, but pretty much the same. It was really just lower on top line inflation, which is not something the Fed looks at that much. And the actual CPI for January comes out in next Tuesday.
Yeah, there's some fear of what happened last year where
Mhm.
they didn't count used cars and automobiles or new vehicles as much, and so there was a revision up, and people got worried about that.
Yeah, exactly. So that's it's usually a non-event, to be honest. But in this environment, it's something that they look at. So anyway, that's our summary for the week. Another good week. Good time to be an investor. It's a good time to kind of look at what's happening. Technology is doing quite well in this particular run. Semiconductors, cloud computing, cybersecurity are three big areas that we have that have done well, as far as that goes. So it just kind of continues to move forward, and enjoy the ride. It's got to have some upside to go with the downside, and this has been fun so far. We'll keep watching and see what happens here. But anyway, look forward to going over this again next week.